Welcome to episode 58 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week we bring one stock, one headline, and one reason investors should care.
This week, as the war in Iran keeps the price of oil near $100 per barrel, pushing the prices of energy-intensive goods higher, inflation is once again front and center on most consumers' and investors' minds, with Canadian food prices rising by 4.4% year over year in March, and that figure expected to increase in 2026. Unsurprisingly, a number of food stocks, such as Blender Bites and MTY Food Group, have been struggling to keep up with rising costs as of late. This is far from the case, however, for the pair of stocks we're profiling for our listeners today.
The entree stock, if you will, is Montreal-based meal kit and grocery delivery service Goodfood Market Corp, ticker FOOD, food, on the TSX. Probably my most controversial stock talk about in the podcast yet.
And why, pray tell, is that, John?
I immediately recognized the name when I looked them up, and then I realized why I remember them. This past December, the Canadian Food Inspection Agency suspended Goodfood's license due to non-compliance with food safety regulations. A bad look for sure. But the company replied that there are no food safety issues at the facility to be aware of, and the suspension relates mostly to procedural aspects of the license. For example, the review of complaints.
And how can Goodfood regain consumer confidence after this blemish?
Well, the company is trying to force a rebirth. At the start of the year, Goodfood appointed a new chief executive officer, along with a new president and chief operating officer, to stabilize the business, and they even decided to forego their own base salary. Now, they have the work cut out for them. The latest financial results released just last week showed the impact of the license suspension. Net sales were 23 million Canadian dollars in Q2 2026. That's down 30% from last year's Q2. And gross profit was 7 million Canadian, a 12% drop from Q2 2025. Food stock is trading for 20 cents on the TSX, and year-to-date, it is down 40%, but still trading 11% higher than where it was this time last year.
Still sounds like a risk to me, John.
True, this is a no risk, no reward story for sure. I like the hard reset story personally. I was going through the latest conference call after their earnings report, and they talked about a lot of emphasizing cost discipline, margin protection, and cash generation, while simplifying the operations and improving product offerings to, they say, enhance consumer attention. So while we see a negative adjusted EBITDA of 1 million Canadian, management is so optimistic about the future that the same executives who rejected their own salaries mentioned in that the brand has increased portion sizes and even sourced better ingredients for its food. Now, here's so much about how food brands are charging more and using worse ingredients, but at least Goodfood is trying to do the opposite. Now, Trevor is back from the buffet with another fresh stock served up for you.
That's right, John. My food stock in focus this week is Happy Belly Food Group, ticker HBFG on the CSE, market cap $249 million. An acquirer and scaler of emerging Canadian food brands with a specialty in quick-service restaurants, highlighted by the runaway success of Heel Wellness and Rosie's Burgers, that has been growing at a scorching and increasingly profitable pace over the past few years.
Oh, so tell me about the company's recent trajectory. Why is it so impressive?
It really comes down to prudent capital allocation, with the company signing deals for more than 600 new restaurants, either operating or under construction, since adopting the Happy Belly name in September 2022, going on to achieve 14 consecutive quarters of record growth, while finding its way into positive operating income over the past 3 quarters, demonstrating that leadership has a firm handle on its ambitious plans.
And what are Happy Belly's finances looking like as of the most recent quarter?
That would be Q3 2025, and the quarter was marked by EBITDA and royalty and fees for the quick service restaurant division, both surpassing $1 million for the first time, with company-wide revenue rising by 188% to $7.2 million, momentum that has leadership confident in delivering significant growth in 2026.
Huh. So while inflation is sending food prices higher, how has the Happy Belly stock gotten by?
Exceptionally well, I'd say, adding more than 48% year over year, which is well ahead of the TSX's 38.5% effort, and more than 1,200% since September 2022, making Happy Belly one of the most impressive and lucrative growth stories in the Canadian consumer space.
So I got to play devil's advocate here and just ask you why you think the company has been such a rousing success when other consumer brands like it are falling by the wayside.
Well, I think you don't reach positive operating income with a portfolio of 75 operating restaurants, as is the case for Happy Belly today, without keeping a close eye on every dollar and allocating it only after careful consideration while reducing costs without hindering quality in any way you can. CEO Sean Black often emphasizes the discipline at the heart of the company's playbook, and that rings true on its income statements. Combine this value-conscious approach with organizational principles of people, product, and process, and it isn't hard to understand why an increasing number of people want to invest in the company and dine in its restaurants.
As always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
Find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with Goodfood Market Corp. And Happy Belly Food Group, Inc., and is intended for informational purposes only. For full disclaimer information, please visit stockhouse.com/legal/disclaimer.